Hi guys, welcome. So I decided to take a little break from financial management. Of course, those videos will keep on coming, but I thought let's focus on that one topic which I love the most, and that is financial reporting. So today's discussion is about one of the most fundamental accounting standards in financial reporting, and I would say it's one of the top favorite standards for students because it's an easy standard. So I'll be discussing property, plant, and equipment today, which is IAS 16. Before we discuss property, plant, and equipment, it is essential for us to discuss what are non-current assets. Of course, we'll have a separate video on what are current assets, non-current assets, and that discussion will follow. But right now, to understand what exactly are non-current assets, there are 5 points that you should keep in mind. The first one is that these are not held for the purpose of resale. This laptop that I'm using to conduct these video lectures is something I purchased 2 years ago. I have not purchased it with an intention to resell. I have purchased it with an intention to use it in my business. So this particular laptop is not held for the purpose of resale. It is held for the purpose of generating revenue or for use in the business. It is expected to be held for more than 12 months from the balance sheet date. Now, there are a couple of words in financial reporting which they are a matter of contention for a lot of people because you see the word that I have underlined, it says expected to be held for more than 12 months. Now that creates a certain gray area, right? If you say which have to be held for more than 12 months, that means it's a very clear provision. Here, the word is expected to be held. And it is very difficult to judge somebody's expectation. So, an auditor's job becomes all the more difficult. Is it a non-current asset or is it a current asset? How will the auditor judge? The auditor will have to check what is the idea or for how long does the entity expect to hold that particular item. Then these non-current assets could be tangible or intangible, and they are normally not liquid assets. And what are liquid assets? An asset is a liquid asset if it can be easily converted into cash without losing any significant value. So if I'm talking about, say, a bar of gold, it can be converted into cash easily, and whatever is the market value today, you will receive that particular amount. On the other hand, if I'm talking about this laptop, I purchased this MacBook for 1 lakh, but today if I go to sell it in the market, I'm sure I'll get only 22,000. So it's not even close to what its written down value or its carrying amount is right now. So these are items like a laptop, my building, my furniture. These are all usually not liquid assets. That is, they cannot be easily converted into cash without losing a significant proportion of their value. So if I have to define non-current assets, how would I define them? Non-current assets are expected to be held for more than 12 months from the balance sheet date. They are not held with the intention to resell. They are held for generating revenue or for use in the business. They can be tangible or intangible, and they are normally not liquid. We saw just now what the word liquid means. Now, when I personally sit down to remember which accounting standard applies where, I find it easier to remember those areas to which the standard does not apply. In this case, IAS 16 property, plant, and equipment does not apply to non-current assets held for sale because you have a separate standard. For biological assets relating to agricultural activity, you have a separate standard, IAS 41. Exploration and evaluation rights, again, you have a separate standard, IFRS 6. And mineral rights and mineral reserves, again, non-generative natural resources, there is a separate standard for that. IAS 16, if I want to identify to which items does IAS 16 apply, this is basically property, plant, and equipment are tangible items. So when non-current assets was a broader group of which property, plant, and equipment is a subset. Under non-current assets, you will have property, plant, and equipment. You will have investment property. You will have right of use assets. You will have certain financial assets, which could be long-term in nature. Right now, our discussion is property, plant, and equipment. Now, what exactly are items covered under property, plant, and equipment? These are tangible items which are held for use in the production or supply of goods and services. For example, plant, machinery. Like if I'm a trainer, I have this particular laptop. I'm using it to conduct my classes. I'm using it to conduct my YouTube recordings, which will be uploaded, and in short, they will help me in generating revenue in the future. So property, plant and equipment, one of the asset types is those which are held for use in the production or supply of goods and services, or assets which are for rental to others. Now be very careful in this clause. What does it say? For rental to others, but assets other than property which are rented out. So if I'm renting out cars, if I'm renting out mixer grinders for use, or if I'm renting out laptops for use, that is covered in IAS 16, property, plant and equipment. If you are renting out a property, the property that is rented out gets classified. It has a separate standard, IAS 40. This one is assets which are given on rental to others apart from property. Number three is assets used for administrative purposes, like my head office building or my printers in the head office or fax machines, which do not directly contribute to generation of revenue, but which are held for administrative purposes, or assets which are held for own use. Like a building, say for example, there is a steel plant, like the Tata steel plant, and they have their own township. Now, in that township, they have created houses in which the employees of that particular company stay. So it is for own use, and that is also covered under property, plant, and equipment. And all of these are assets which are expected to be held for or used for more than 12 months from the balance sheet date. All of these assets taken together form your property, plant, and equipment. Let's quickly revise. Tangible items which are held for use in the production or supply of goods and services, like your machinery, plant, laptop, all of these. Then for rental to others, all assets which are given on rent to others apart from property. Assets which are held for administrative purposes and assets which are held for own use. All of these assets together are covered under property, plant, and equipment. Okay, and these are of course expected to be held for more than 12 months from the balance sheet date. Please keep in mind, property which is held by an entity with the intention of renting out to others does not come under IAS 16. It gets recorded under IAS 40, investment property, which is a separate accounting standard. Okay, now having understood what items are covered under property, plant, and equipment, you should understand one thing, that in every accounting standard, there are five things that we are going to study. For every item in the financial statements, there are five things which are very important. One is recognition, when to record the accounting entry. Second one is measurement, at what value do you record the accounting entry. Third one is presentation, how do you show it on the face of financial statements. Fourth item is disclosure, what additional information do you provide for these items. And the last one is derecognition, when do you stop recognizing that particular item in the financial statements. Now, recognition answers the question when. When do I record my non-current asset? When do I record the entry non-current asset account debit to cash or non-current asset account debit to supplier? कब ये entry record होगा? That is what that is what recognition answers. When do you record the entry? The word is when. Now, an item of property, plant, and equipment is recognized when it is probable that future economic benefits associated with the asset will flow to the entity. Now, future economic benefits associated with the asset. So if this is a laptop, now it is my laptop and I will be using it for my classes, for my videos, and I will earn money, I will generate revenue from it. So future economic benefits will flow to the entity, and the word is probable. The word probable has a very specific meaning in financial reporting. It means that the chance of happening is more than the chance of not happening. So an item of property, plant, and equipment is recognized when it is probable. What is probable? That future economic benefits will flow to the entity and the cost of the asset can be measured reliably. This one recognition condition is there in almost all the accounting standards, that when can you record a particular item? You can record a particular item only when its cost can be reliably measured. And with that in mind, if these two conditions are fulfilled, then you go ahead with the recording of accounting entry. Now, initial recognition means first time accounting entry, when it is being introduced in your books of accounts. Initial recognition means first time entry. We have answered the question when. Entry kab record hoga? When it is probable that future economic benefits will flow to the entity and the cost can be reliably measured. Now, an item of PPE, कब entry record करना we have answered. At what value should I record the entry? कितने पे record करूं? An item of PPE, that is property, plant and equipment, must be measured at cost. Now, the word cost in our general conversations, we use this word very lightly. But when it comes to property plant, when it comes to accounting, specifically here, the word cost has a very specific meaning. Cost means the purchase price, that is price that you pay to the vendor. Then costs that are directly attributable to bringing the asset to its current location and working condition. Now, please pay attention. This line is, your base rule that you must follow whenever you are making a decision on whether to capitalize a particular cost. Now, let's imagine that, I have purchased a washing machine. Now, or I have purchased an air conditioner. I go to a Vijay sales store and I identify I want this AC. Now, naturally, I cannot carry it home. So I request the store that can you please deliver it to my location? I will pay you 1000 rupees. Once that AC comes to my house, it is lying in my drawing room gathering dust. I mean, just putting it there is not enough. Now, I have to mount it on a wall. I have to make the electrical connection. So there are certain charges which are incurred for installation of that particular item. Now, you will realize that unless I pay the delivery charges, it will not be delivered to my house. It will not come to its intended location. Also, unless the installation work is done and I spend money on installation, it will not start working. So to make the asset work, to make the asset perform its intended role, I have to incur delivery cost, installation cost, maybe demo cost, and all of these costs. So costs that are directly attributable to bringing the asset to its current location and working condition have to be capitalized. Capitalized matlab you have to include that amount in the asset value. Okay. Now, so delivery charges, installation charges, if I'm purchasing a property and I'm getting the property registered in my name, I will have to pay some charges to the municipal authorities. So those registry charges are necessary to make the property transferred in my name. Hence, those charges will also be included in cost. Now, if you are doing a trial run before actually using that particular asset, then the cost of that trial run before use is also included in cost. Why? See, I mean, if it's a person like me or anyone for that matter, when you buy a new washing machine, you don't know how to use it. You will just keep on pressing buttons like it's some video game. So, if I know for a fact that I'm getting a new washing machine and I don't know how to use it, I will have to call someone from the store to perform a demo for me. That person will perform a demo. That person will show me how it works. And unless that particular cost is incurred, I will not be able to use that washing machine the way it is intended to be. Hence, the cost of trial run before use is also capitalized in the cost of the asset. And non-refundable taxes like custom duty. Now, I have made one short video on what are refundable and non-refundable taxes. Now, I'm sure all of you have heard of taxes like GST and VAT. Now, these are taxes where the tax paid at the time of purchase or tax paid on expenses is allowed to be deducted from the amount of tax you have to pay on sale. So the tax that you pay to the government authorities is calculated as tax on sale minus tax on purchase. So this minus tax on purchase that you do, that helps you to reduce the liability, that helps you to reduce the amount payable of the sales tax or VAT or GST, whatever it is. These taxes which allow subtraction of tax paid on purchase are known as refundable taxes, because the tax paid on purchase is allowed as a deduction from the tax paid on sale. Now that deduction is known as input tax credit. So those taxes which have input tax credit like GST, VAT, they are not added to the asset cost. But taxes like custom duty, which are basically non-refundable in nature. In case of custom duty, you don't have the facility of tax on sale minus tax on purchase. Whatever is the amount of custom duty, you have to pay it to the government authorities. Custom duty is paid on import of material from another countries. So non-refundable taxes like custom duty are added to the cost of the asset. I'm going to make a separate video on estimated cost of dismantling, restoration, site cleanup. So for now, just keep this in mind that estimated cost of dismantling, restoration and site cleanup post exit is added to asset cost, I will be making a separate video on this one line because it's an important provision that you need to keep in mind. So what all does cost include? Purchase cost, then costs that are directly attributable to bringing the asset to its current location and working condition, non-refundable taxes, and trial run before use. The fifth one, we'll discuss that separately. And costs which are specifically not included. Any cost which is not directly connected to bringing the asset to its current location and working condition is not included. So admin cost or general overheads which will be incurred regardless, or any abnormal wastage, abnormal costs, repairs and maintenance, all of these are not included in asset cost. And amount earned from sale of items generated during trial run. This is an amendment in IAS 16. Earlier, what used to happen was this had a very different treatment. Let me give you an example. Say, suppose I purchase an oven because I have started my own bakery, but it's a very sophisticated oven, so I don't know how to use it. I ask the dealer that please come and teach me how to use this particular oven. So he comes and he teaches me. And then he tells me that Satyamend, you let me do a trial run. And I said, how will you do a trial run? Na? I will have to put something in the oven and see is it working or not. So I decide to put in cookies and cakes and all of that, like one or two sample pieces in the for trial purpose. He runs that particular oven. He shows me it is working. I'm happy with the usage. Now some biscuits, cookies and cakes were made in the trial run. What do I do with it? फेंकूंगा तो नहीं, गाय को भी नहीं खिलाऊंगा. So what I will do is I will go and I will sell it as a sample to some customers. Now, if I earn some income out of it, which I will, earlier, what they had told you was they had told you that this income that you get from the trial run of this particular oven, this income was to be adjusted in the cost. But now IAS 16 has specifically told that amount earned from sale of items generated during trial run, do not adjust it in cost. You have to credit it to profit and loss account. So earlier it used to get adjusted in cost. You used to subtract it. Now that is not allowed. Now you are going to credit it to profit and loss account. So right now we have discussed the recognition criteria and at what value should the initial recognition happen. In the next video, we are going to discuss estimated cost of dismantling restoration site cleanup. Why is it capitalized? And most important, how is it capitalized? So stay tuned for the next video, which will come out very soon. That is tomorrow.